Alright, hello, welcome to the Tuesday London Open session on the NFP week. Here we go, that's where we start. Let's jump to the daily chart for a second. And we can see that we made somewhat of an important low, traded up into this suspension block in here. And that's where we are dealing for the most part. But on the upside, this area in here looks way too smooth. So that's like ultimately where I think price might want to draw up into. Longer term, near term, this short term high here feels pretty reasonable as an expectation. But yeah, we will need to overcome this suspension block first on the daily chart here. All right, so let's add the new day opening up for today, if there is any. All right, it's very tiny, so I can use the for 14 settlement here, if that can help, and it will. So that's a better one. All right, so that's the end doc that I want to use. Just use there. There. And now we are away from it. And we are inside of this little range, which is the opening range for the long open session, 130 to 2. Trade slightly outside of it, but then came back below 50%. And here we are meandering around. So we have some relatively cool lows in here for the sell side liquidity. These ones are quite nice. Buy side liquidity rests above that. I like those relatively cool lows. They were tapped into, but very shallowly. So I wouldn't say that this is enough of a run against them. So expecting to potentially trade deeper below that would be somewhat reasonable, I'd say. Let's jump to ES for a second and let's see what's up there. So ES did engage the buy side liquidity that I was pointing to yesterday. And the next one, is here, all-time highs. It has some relatively lows here that immediately jump off of the chart at me. Alright, so that's the end doc for ES. Traded higher, took some buy side liquidity, and now is underway on some retracement. Which it's reasonable, definitely reasonable. After we took the daily relative equal highs, it's reasonable to see some retracement, but also kind of tricky to be very certain and confident that it will occur right now, right here, I feel like. But nonetheless, a pretty nice run yesterday, quite a large range on both Nasdaq and ES off of the new week opening up into that daily suspension block, clearing the buy side liquidity and expanding really a lot to the upside. So yeah, here we are arriving at the 3 a.m. and do I have a very strong opinion or idea what price should do at this moment? Right away, it makes me a little bit more careful. So that's fine. Let's see. Let's tape read and see what will happen during the session. So we have an bearish order block in here. That price is trading up into currently. This is the mean threshold of that order block. So that's if it's gonna trade into this fair value gap and gonna turn, the mean threshold of this order block should cap any upside potential. So far price is trading right on through that, so it's not offering much premium sensitivity at all, meaning that the buy sell liquidity above this high here is probably likely to get attacked. All right, 2 minutes after 3 a.m. All right, so the buy side is being approached. And here, what was the plan for today? I guess just watch and see and focus on the near-term, short-term liquidity pools. So probably more like a scalps. And yeah, still keeping it potentially slightly more bullish. Higher time frame, but lower time frame shenanigans might be both sides. All right, so on the upside in here, I have the upper octane of that suspension block. And this is kind of where my attention is right now on the upside. I want to see if we can reach up into this level and how price will behave at that point. Because yeah, so far if we zoom out a little bit, and consider the 6 p.m. the open for daily candle, you can see that we opened, made a run lower, some sort of a Judas, price rallied up strongly and then continued in the direction, and it just took the current's daily high, which means we are technically pretty stretched up into the daily range, the current daily range. We are right on the at the highs after already quite a bit of a rally. So yeah, buying after partial liquidity like this is being taken out is I would say less optimal. Therefore, yeah, I still like the sell side liquidity in here, not gonna lie. I still like it for the purpose of seeing a deeper run. But let's see if it offers an idea that would make sense. All right, so let's see if this will offer any inversion sensitivity here. Yes, too much cell site. All right, looks like this might roll over right away into the cell site here, I feel like. If that's the case, then I don't think there is close below the consecutive encroachment here on that BC. Doesn't mean that it needs to give way straight away, but that's already a little bit of a sign of weakness, I would say. Well, now we are trading below that a little busy here at 259. But yeah, this is quite a heavy run in here that doesn't really uh, bodes well for entering on that if you aim only for the sell side here, I would say. Because that's a little bit too small of a range in my mind. All right, price went below it, close below it, now touches into it, so I would like to see it act as a inversion, bearish inversion for value gap, and send it right into the sell side for roughly 20 handles of a run. That would be like a setup, 20 handles potential, I would say. Yeah, more or less 20 handles with like 15 handles stop loss, 10 more aggressive. But yeah, as a small little scalp, that's not too bad, I would say. But yeah, it's pretty small and tight uh, range nonetheless. But that's exactly what I would like to see. Inversion, run the sell side, finito. But now let's think how far or where could it trade when it would like to go deeper below. And to my eye, right away it pops this area in here where we have couple of volume imbalances below it, like this. This is like a suspension block, kinda. Volume balance, volume balance, volume balance. We make it into one. And yeah, that's kind of like the as far as I would project or predict it could go. If we go below the lows here, this is what I would expect potentially next, I suppose, like a best case scenario. Doesn't mean that it would need to go there, but that's somewhat I would consider. So we got the sell side, got the 20 handles run off of this inversion for value gap here into the sell side. And now that would be a matter of question whether we can get down there. Will it go there? I don't know, right? That's like the gray area. Yeah, I mean, I did a little analysis on ES already, and I'm thinking all-time highs ES is reasonable expectation next until proven otherwise. So higher time frame probably still bullish. Intraday shenanigans might require some more info, but supposedly any radical lows that are being taken on ES should or could likely offer continuation to the upside, and that's kind of what I would stick with as an idea. But all right, we've taken those radical lows here. I mean, I would prefer to see it be taken out with a body, but nonetheless, it did it only on the weak basis, and then rejected back inside the range, and already closing above consecutive encroachment of this inversion. So let's see, let's watch those two, whether they can offer any resistance to the price, but nonetheless, it's pretty tight of a range here. So let's see. A quick look on the ES, and yeah, I mean, I don't know, recently ES during clown open session looks slightly less liquid and doesn't really offer that clean of a price action, I would say. But yeah, I don't know what I would do with it right now at this moment. I would have my attention on those lows here, but yeah, it would require a little bit more inter. So it ran radical lows in here, and I would want to see a displacement below the short-term low if it's actually bearish here. Because yeah, Nasdaq already took the sell side here too, but already is like strongly coming back inside the range, not respecting these as any premium arrays, instead using this as a reclaimed bullish fair value gap. So it used it in a bullish manner, and now this can act as a bullish inversion also to support price. and yeah, that's kind of what it looks, but at the same time we are kind of rolling into this being a consolidation around here, just going sideways, not expanding either higher or lower, which is yeah, like additional difficulty. All right, so now back into this bullish inversion for value gap. Let's see how it will act around here. It should not close in the lower half if it's really good for higher. Thank you, Danielle. Thanks. I appreciate it. And good luck to you too. So yeah, this is not acting as an inversion for value gap here at all. Back into this reclaimed bullish for value gap. But yeah, it just becomes a little bit messy in here. It is becoming a little bit messy in here. So let's see. Down close candle here. This candle, it should rally higher if it's still bullish, if it's still reaching for deeper run on the buy side. Well, so this is a period where the PD arrays aren't necessarily being used in a very precise way and or manner. So that's usually a good moment to just wait. Right, so the reclaimed bullish value gap respected in the upper half, nice. Rejected higher, closed above this inversion, so it should not post any closing price in the lower half at this moment, and should rather quickly attack this short-term high and possibly the buy side here. Yeah, I mean, it feels like it became a little bit unruly here. It took the buy sell liquidity, it took the sell sell liquidity, both on the shallow ends, and now we are just in the middle of the range, basically, which is just a hallmark for low probability, I feel like. If it's good, this candle should be running higher now. So let's do a quick test. If it's really good liquid market, this candle should be already running this short-term high. Okay, it's not. So that's already like a question mark, but let's see. All right, it's taking the buy set, the short-term buy set here indeed, and that close above it, in my opinion, should make it easy for a reach up into the buy set here now. Let's see if we can get that. And if we can get any follow through. But yeah, so far, not the easiest session to navigate for sure. Not the easiest. All right, so the buy sell liquidity is being approached, and in close proximity we have this upper octane. So my attention would be, if we take the buy side, can we go into this level here or not? But that's what I would expect as far as this initially. So we got the peers above it, and now I'm watching this level here. So initially price is stretching towards that, which is good, which is fine. Now let's see if we can get a touch. Now let's see if we can get a touch, and also all of this is basically a balanced price range. This is basically a consolidation going both sides, both sides, both sides, both sides. And now we kind of are breaking outside of this consolidation. And why it's meaningful? Because we are doing that on a closing basis for the first time. Every other time we were trading below the low or the high, it was only on the basis of a week, not on a closing basis. This is actually being closed above, so that's a little bit more meaningful. Therefore, right now we want to see and study two scenarios, right? Because one scenario, we could break out of this buy side, break out of this consolidation, take buy side, and then return back into the range. That's one option. Second option is we left the consolidation, took the buy side, and then we displace even higher, and that would warrant a potential continuation higher. Which one of those will be used or applied today? I don't know at this moment. Can't tell. But I'll be studying to kind of like get a better feel for which one is more likely to be delivered. But the thing is to just wait for a tell, which would be either a displacement higher or a displacement lower, basically. That would give some information, especially if we could pair it up with this key level up here. That would make a lot of sense then. Alright, so we trade into this busy upper half, and I'm now watching if we can make a higher high into this octane up there. That's what I would expect. Nice reaction here off of that. And let's see. All right, there we go. So we got that octane in here, traded up into, and now let's see what it provides after that. So far, no close above it yet, but this basin here offers initial discount sensitivity, so unless we close below it, this looks like it may want to continue. But again, that's the mile marker, that unless we close below it. If you close below it, then it's not as bullish, I feel like. But let's see. There we go. So we are expanding through that a little bit. If we can close above it and maintain that strength, then the next logical level would be the high of the suspension block, which is up here, and that could have been the next draw on liquidity. But still, it's kind of early to tell. But at the same time, if this busy holds true, then I feel like the probabilities are in favor of this suspension block high versus anything else. But again, that's kind of like the line in the sand for now. Let's see, we closed above it, so that also is warranting a potential continuation. All right, so it's actually rejecting here a little bit. It's actually rejecting here a little bit back into this busy. It posted an potential order block, bearish order block in here. All right, so mean threshold and the opening of that order block, line in the sand, and now closing below this warrants a potential reversal here in my mind and come back inside the range, potentially seeking the salsa liquidity here, because again, that was only on a week basis. So this is a potential inversion for value gap here. The stop loss would need to be above mean threshold of this order block, which is roughly 17 and a half, let's say. Alright, it's stretching away from it already here. So yeah, IMO, that looks reasonably well. Expecting the sell side here, and then where it could go below that, right? The suspension block here. That would be the expectation. So possibly using this inversion for value gap here at 326 to frame a run into the sell side here and below to the suspension block here, which would be roughly like a 70 handle, 75 maybe, which is a good amount of range, respectable. That's what I want to watch now. Yeah, I mean, the main reason why I'm not engaging this right now is kind of like because the overall market structure in here is quite complex. It's quite complex. It's not that easy to navigate, which makes me less interested in risking something inside these type of conditions, especially while I'm in drawdown. I want as smooth and as easy markets as I can get, and this type of complex market structure can be sometimes a little bit misleading, I would say. So watching and studying whether it can deliver, that's probably like a very good idea to do. But at the same time, if it would fail, which in this type of environment the chance is quite real, then yeah, that would have been like an unnecessary loss, kind of, I feel like, or just being a little bit too aggressive. But yeah, that's my opinion. That's how I'm gonna approach this session here. Yeah, so right now, as we are approaching this inversion for value gap back again, it would be very important not to close above the consecutive encroachment, right? And or above it completely. If we do, then that's already like making the probabilities of this idea unfolding way smaller. So this is kind of like key to reject this area as quickly and as strongly as possible. Then the sell side liquidity in here and this suspension block is really a solid target to aim for. So far we couldn't even reach the low of this inversion, and we are showing some initial reaction lower. That's potentially heavy market, that's potentially weak, so that's potentially a good thing for the suspension block down there. yeah, so far so good. I like this stretch lower here. And I would love to see like a large range to the downside continuation next. Especially as we are approaching this level here and potentially this level here. So I don't want to see price stopping inside of it, right? Because this is an area where it could gather some discount sensitivity and reach higher if it's indeed bullish, and if it's indeed not looking for lower prices. This is kind of where it could fail. So that's why I would want to see it be overtaken on a closing basis as quickly as possible. So here, return to the up candle right there, which is a bearish order block. That's completely acceptable. And now it should just give up the ghost and trade lower quickly. This is also like an immediate rebalance in here. So immediate rebalance to this candle's low. Beautiful signature. If it's bearish, which I'm suspecting it might be near term, it should completely scream lower this candle here or the next one after that. If it doesn't, that's a huge signature that it's probably not as good. So let's see. This candle or the very next one should be aggressively running lower with large ranges if it's actually bearish and if it's actually good to look for the sell side liquidity here and the suspension block. And again, because the market structure here is pretty complex, it's not that easy, right? It's not that simple. So it takes a great deal of patience, courage, and engaging with this type of conditions in here. Yes, they can be profitable, but they are definitely more difficult, and they are more apt to lead you into a wrong direction. I feel like. So the very next candle after immediate rebalance didn't deliver lower. So this one is the last chance. This one in here is the last chance. If it doesn't start running lower, it's probably not good. And initially it doesn't already. And look where the price stopped in here. It respected the upper half of this inversion for value gap. So that's not what you want to see if you are bearish. If you are bearish, that's exactly not what you want to see. So this already immediate rebalance failed. Price respected upper half of this bullish inversion, and it retraded kind of like to equilibrium almost of this entire consolidation. All of that is an issue if we don't overtake it with a large range to the downside very quickly, right? Which that's a difficult position to be in, where you need to demand something from the price to be strictly done. Otherwise, it's really not good for your position, which would be short of this inversion here. So yeah, already I'm not as confident for the shorts, and a likely return back into this inversion is something that I would potentially count with. And then again, that's kind of like where it might work, but it might also fail. Why? Because we already gathered some bullishness here, and it will be like the first time really that we will trade into this, because here we failed. So we have no clue what and how it will trade inside of it, right? So yeah, it's tricky. It's quite tricky. And yeah, the price is also proving that, I feel like. But all right, let's say these are difficult conditions, but we stick to the original idea, which is the sell liquidity here and the suspension block. So what price can do still now? Is the idea still valid, or is it completely invalid? So in my mind, the idea is potentially still valid. It's not as high probability as I would like, I feel like, but potentially still valid only if this inversion fair value gap in here is being respected in the lower half, which we don't see that right away because price already trades into the upper half. So it's already testing the boundaries a lot, which isn't good. This is not a good sign for shorts. I feel like it closed above it even, so the order block and the mean threshold is like the last line of defense, but it's hard to trust that it will stay because it could easily go for that high, and it would be completely reasonable for the price if it does it, right? So last line of defense is the mean threshold of this up candle. If we overtake that, then the high, and then this will technically turn into a breaker, bullish breaker here. All right, so the body's not closing above the mean threshold and the opening price. This inversion fair value gap, as we trade now into it, if it's still good on the downside, it would need to completely displace lower at this moment and offer no discount sensitivity in the upper half. Will that be the case? I don't know. So I don't want to give too much credit to it, but my gut feeling is telling me that it's likely to run this high. But maybe my gut feeling will be wrong because the technicals are presenting a displacement lower here, which is the last chance for the downside to deliver. As we left this range now, this is a balanced price range now. This is a balanced price range. It should never ever see a close in the upper half. So as it's trading back into it here, it should just smash lower. And that's the last chance. So that's what I'm watching also. Last chance. Any closing in the upper half, it's probably not good. All right, so far dodgy undecisive candle here. So we need some large body candle to the downside that would confirm that they did the damage here. I was coloring outside the lines, but within the logic. So the mean threshold was the exact high here. That's where that was the last line of defense. It actually stopped the price. It worked. So it should now attack the sell liquidity more convincingly with speed, and it should never ever breach the consecutive encroachment. So this is like a brick wall in here that it should not surpass all the closing bases. If it does, then the probabilities fall off significantly and it's just becoming an ugly session. But yep. Again, I don't have any horse in the race in here besides my opinion and what I would expect based on this price action here. But admitting that this is a complex market structure which can be a little bit tricky and unruly to trade, and that's why I'm personally not engaging with this. But the idea is still valid, so that's what I would watch. Right, this suspension block, as I mentioned earlier. So now, as we are trading again into this inversion and this potential reclaimed bullish value gap, I would like to see just cover to the downside with large ranges and possibly close below them. If that's the case, then it's really good for continuation lower. But yeah, after we did this respond off of the mean threshold here, I like the structure a little bit more to actually deliver the downside. Doesn't mean that it will for sure, but it looks generally a little bit better and more probable in my mind. All right, so let's see. A dodgy candle like this, I like that. It should be quickly overtaken to the downside. It could offer institutional or financial real here. I like that. I like the close below this inversion for value gap. That's good. Any return back into it should be met with resistance, and it should offer heaviness. Also, if you look, we have a high, low, higher high. This is a bearish breaker technically. So any returns up into it too should keep price from rallying and should keep price heavy in here, in this area. So let's see if we can get that. So far so good. Nice reaction off of that. Let's see. Right, so it's hanging around in here, but again, I would suspect a large ranges soon, and just keep it heavy, clearing. I mean, drawing into the sell side here, because yeah, the damage was done on the upside. Price already has proven that it was to go lower, and this is the most logical area to reach for, I feel like. All right, but yeah, nonetheless, 4 a.m. is there, so this is basically it for me for the silver bullet session per se. Was this an easy session? No, it wasn't. Were there some opportunities? Yes, I guess. A few small opportunities were even outlined, but yeah, generally pretty difficult session to navigate, and not being nimble in this type of conditions, oh, that can break you. That can break you. But yeah, regardless, I will still watch later on whether this idea will pan out or not, and tape read that. But besides this, I don't have anything else for the long open session. I'll be back for the New York AM session, and we'll see what we get there. So thanks for watching, nonetheless, and I wish you guys a pleasant reminder of the day, and see you later. Bye bye.